Welcome back to Indianomics. I've been speaking with three eminent bankers, Varadarajan of Axis Bank, Pradeep Kumar of SBI and Ranjan Dhawan of Bank of Baroda about the state of NPLs and trajectory of loan quality going forward, given the several steps taken by both corporate India and the government. Well, there is one technical problem which we referred to, the fact that from April 1st onwards, you can have either good loans or bad loans. You can't have this middle category of restructured loans, for which you don't have to provide as much as a bad loan, but you have to provide a little more. Srini, what is the sense? Before I come to the resolution of legacy loans, is this going to mean that in the April-June quarter itself, we could see a spike, but that will be a one-quarter spike?
No, I think what RBI has done is to make sure that when you restructure, it no longer is called a restructured standard asset, but it's called a restructured substandard asset. And but the way banks would look at resolving some of these assets is broadly going to be the same. If the recovery possibilities from a loan is better by refacing the repayment schedules, you would still continue to do it. Only the tagging is going to change, and probably the amount you're going to provide is going to change. If a project or a corporate is going through stress because of underlying economic conditions or things beyond its control, and the chances of recovery is better through a restructuring rather than through a recovery process, which again, as Mr. Pradeep Kumar mentioned, has a lot of other legal implications and delays involved, you may as well restructure and trying to recover your money as to the best extent possible than just initiate recovery. So it is just a tagging issue, and to some extent how much you provide for it, and that is what is going to change. But otherwise, fundamentally how you approach a loan in terms of resolution, whether it is restructuring or recovery, is something which the banks have to decide based on the underlying quality of asset. But
is that the way bankers look at it? I mean, first of all, the rules allow you to lend more even if it is an NPL. And secondly, generally, what is the mentality of bankers? Would they, for the first time, you're going to be faced with the fact that even if you restructure, it may be a bad loan. But are bankers approaching it with that positivity?
I think we're still in the Q4 of this year. Okay. The new fresh guidelines have not yet kicked in. I think we will know as we go into the next quarter. But broadly, I think banks will do what makes commercial sense. And I think in that
context,
I think we will do what makes best sense for banks.
Okay. What's your take, Mr. Pradeep Kumar? For the system, will there be that one-quarter spike?
See, normally in the first quarter, not many restructurings takes place, primarily because most year-ends are 31st March. Bankers wait for the year-end numbers. See, it may not happen in Q1, maybe it will happen in Q2 or Q3 also.
Okay. Well, Mr. Ranjan...
may not necessarily happen in Q1.
Okay. Mr. Dhawan, the other point I wanted to ask is, although RBI is not going to allow a category called restructured loans, it is also providing for easier restructuring of some real huge legacy loans, infrastructure loans. What has been the extent of use of this 525 rule, so to speak? Have some of the potential restructured, potential bad loans been restructured by the system in the form of 25-year loans?
Our bank has at the moment 3 or 4 proposals in which earlier we had sanctioned, let us say, 10-year loans, and the economic life of the project was much longer. We have 3-4 proposals for extending the repayment period, which is in fact a far more realistic period, maybe 20 years, maybe 25 years. So, and we are looking at these proposals. There is, of course, one technical problem at this, and that is that the Reserve Bank of India guidelines say that if you are to, enforce the 5/25 rule, in effect, make the repayment period much longer, you will have to protect the NPV. Now, in protecting the NPV, if we elongate the repayment period on the same terms and conditions, the NPV cannot be protected, and therefore we would have a loss. We will have to make provision on our books. So this is a problem we are facing at the moment. We are trying to find a work around this.
You all have succeeded, Mr. Pradeep Kumar, in converting any loan into a 25-year loan?
So we have, but fortunately for us, what we have tried is 2-3 accounts where we have gone by the earlier RBI policy, I think, which came out in August, where if there is a 25% of the loan is taken by a new banker, the loan can be restructured for a longer period. We have used that guideline, and I think we have restructured 2 or 3 or 4 are in the pipeline. So we didn't have to provide that because there is no NPV guideline in that guidelines of RBI of the August, I think August 7th, 2014.
Okay.
As Mr. Dhawan said, the other one, yes, there is an NPV issue. So far, we have not done anything in that category.
Okay. Srini, what about the other big provision that the Reserve Bank hopes will lighten your problems? The ability to convert debt into equity. And if that equity is passed on to a new owner, then you don't have to mark that loan as an NPL. Obviously, the minor rules have yet to come. Do you think this is going to make for reasonable number or at least some number of management changes and therefore will save banks from NPLs?
I think it surely helps. Clearly, your ability to bargain or negotiate with the current sponsor once you have such a clause, and your ability to have a substantial holding in the company clearly strengthens your hand, and that would go a long way in terms of trying to seek better resolution of the asset. But if you look at projects itself, typically in most of the project finance transactions, you have most of the shareholding of the SPVs already with you. So to that extent, that is something which we can still do. The only thing in listed companies you need to be careful is that without the current sponsor cooperating, how easily you can change management control is something we need to test. But this is clearly a step in the right direction. It strengthens the arms of the lenders and will go a long way in terms of making sure we find the right resolution for some of these companies.
Okay, you see it reducing the number of NPLs, you see it helping you, Mr. Pradeep Kumar?
See, this is a step in the right direction. It will be very difficult to quantify it because we have to still wait for the RBI guidelines. Yes, it will strengthen the hands of the banks and maybe change of management will become much more easier. But I can't give a number to it, how many I'll be able to do it in the first quarter.
No, I'm not asking for a number in that sense, but is it also something which will reduce the pressure of NPLs?
Yes, I think the promoters, especially the not so good ones, will be very wary. And when the banks have the leverage of converting their debt or interest into equity, and the resolution becomes much easier, we can always look for to transfer the shares which we have to a new management. But as Srinivasan said, yes, there will be challenges in the Indian context. But I think these are steps in the right direction. This is what the banks have been demanding, and SEBI and RBI together should come out with the detailed guidelines to enable us to take steps in this direction.
Okay. One more thing, Latha, in terms of this, in addition to helping in resolution, I think converting loans into equity also gives equity upside in case the economy turns and these companies start doing much better than what they're doing. So banks, one is resolution in terms of change of management. Second is in terms of participating in the upside in case the company's fortunes change. And I think that is also a useful upside, which if you look at the last cycle, the financial institutions benefited quite a bit.
Oh, absolutely. Steel companies. I mean, I remember the big restructuring of SR, Jindal and Ispat, and that would have made a lot of banks, IDBF in particular, much richer. But Mr. Dhawan, exactly on that point, economy turning. You know, some mining bans have been removed. As well, you're seeing this proposal for gas projects. Let me come to mining bans itself. Is that clearly indicating some activity on the ground or reduction of pain in the mining space, the metal space?
Oh, most certainly. I had one of my major clients, which I will not name, but we all are familiar with. For the first time after many years, I saw some relaxation on his face. He's got hold of a mine, and I hope he shall soon be turning around. I think this is the one step which will certainly reduce pain in the system. I would also, sort of like to comment on the earlier portion that you were talking about. I think this is a huge step in the right direction, this pledge of equity shares, because we have seen in the past that transfer of physical assets is very painful, very time consuming. There are many issues surrounding them. I think, perhaps if we could reduce some enabling, legislation could be passed, that pledge of shares more than 30% the banking system can do. It would enable us to change the management much more easily. As it is, this new provision that has come of converting debt into equity shares is a major step in the right direction, and I feel that it will really help the banking system.
I wanted to just come back to the last set of steps which the government has announced in terms of gas-based power plants. Now, that is a huge, some 60,000 crore of loans that have been given to these companies, most of which are idling. Your take, Srini, is that 60,000 crores likely to be at least stopped from going bad? At least 1/3 will go into operations.
Yeah, I think it's a very welcome step. I think if it works out in terms of the spirit which they put it out, I think basically what they're saying is go up the returns on equity and make sure that you are in a position to service your debt and keep it going till a fresh solution is found. I think that goes a long way in protecting lenders' interests, and that's what we're hoping will happen.
Okay. Mr. Dhawan, that helps you also, I would assume. You must be having, I think you have GMR loans. So you just think that prevents future NPLs?
I would assume so. Yes, going forward, that's a major help. Of course, much more needs to be done in this space, but I think it's a good beginning.
Okay. One last comment from you, Mr. Pradeep Kumar. Since you have the largest number of loans in this gallery of bankers, a 12 lakh crore book, are you getting a sense that things are turning around? Mining, for instance, which Mr. Dhawan spoke about, and eventually, I guess, more coal mining, more steel production, and more power output. Are you getting a sense that deep pain is behind for the economy?
See, as Mr. Dhawan said, I also had a discussion with one of the large companies in India which has mining interests, iron ore mines. They said they've started mining operations in Karnataka, restarted, although at a much lower level because the court has put a max amount of output. Similarly, these coal auctions that have happened, I think this is a step in the right direction. This gas pooling is also a step in the right direction. So all these small steps ultimately I think will improve the health of the economy. We'll see more output, so more cash accruals. More cash accruals means less pain for the banks. I think all these steps that the government has taken will help to reduce the pain of the banks.
All right. Well,
I hope the next year will be much better.
Okay.
Because of all these steps.
All right, gentlemen, we have to wind up this discussion. Mr. Dhawan, Mr. Pradeep Kumar and Srini, thank you very much for joining me. What I keep hearing from all the three guests is steps in the right direction. They have not yet seen the fructification of many of these steps. Only some of them, like mining, of course, have started. So perhaps you're going to have one more quarter of higher NPLs in the April-June quarter, and maybe thereafter we are going to see a genuine reduction in NPLs. On that positive note, thank you very much for joining me in this discussion.